Hey guys, what's up? Alec back with the daily stock market, and look at that. Coinbase is down 14% after hours, 12% on the day, totaling around 26 to 27% downward movements in the span of one day. And just in the span of 1 week, we have Coinbase down 50%, which is the worst case scenario for the stock. From all-time highs, we also have them down around 82%. So make sure you stay throughout this entire video because we're going to be doing a deep dive on a few different stocks, and we're going to be going over price points where I think the best prices are to get into some of these stocks like Coinbase and SoFi Technology, going down to $4 per share today, hanging out there for a while, down 18%, and then all of a sudden they have an intraday movement of upwards 18% and then fell back down around 8 to 10%. And finished the day off down 12% with a 2% movement after hours. So first one up, let's talk about Coinbase. Okay, so here we'll see Coin's Elliott wave structure, which began November 21, can bottom in the next 5 to 7 weeks. So there could be some opportunities with Coinbase. Alongside trade commissions, Coinbase can also earn from interactivity with Web3 apps and staking offers. Whether this revenue expansion can occur, however, depends largely on the decision by the U.S. regulator. Okay, so this is going to be a risky one. Obviously, anything that deals with cryptocurrencies is always a little bit more risky. Coinbase long-term opportunity, and it's just that, it is a long-term opportunity. About 6 months ago, in an article titled "Coinbase More Than Just an Exchange," I made a case that Coinbase had the opportunity to create the first American super app. This opportunity still stands, and Coinbase is acting on it right now with the launch of its NFT marketplace. In my previous article in October 21, I explained how Chinese super apps like WeChat, owned by Tencent, and Alipay, owned by Alibaba, grew it and reached a combined users of 1.6 billion users. I additionally stated that Coinbase had a chance to grow in a similar fashion, provided that the U.S. regulators allow them to offer Web3 applications to their end user. And here we can see kind of like a chart that shows Coinbase could own an NFT marketplace, decentralized lending, cross-chain bridge protocols, layer 2 Ethereum scaling solutions, decentralized data storage, and decentralized derivative markets as well. The ability to offer Web3 applications represents a massive revenue opportunity for Coinbase if given regulatory approval. Coinbase can potentially become another all-in-one internet platform similar to WeChat or Google. The difference is that rather than offer Web 2 functionalities similar to email, social media, YouTube, Coinbase can offer Web 3 functionalities focusing on blockchain transfers, token staking, personal data storage, NFT trading, lending, derivatives, and microtransactions, and more. Here we can see WeChat build a separate, complete, and custom version of the Chinese internet, and Coinbase has a huge opportunity to build a separate, complete, and custom version of the Web3 internet. WeChat meets the needs of Chinese users. Coinbase can meet all the needs of the American Web3 user. We can infer from Coinbase 89 million verified users that there's massive population of people willing to use Web3 applications if the process for it is simplified. The problem, however, is that current Web3 applications suffer from lack of trust due to frequent hacking and scams, poor user interface, UI, and there's no regulated clarity. So Coinbase does have huge potential to be the next big thing, and they're coming down to more of a justifiable valuation after they're down 82%. It could be a lot more attractive time to start looking at them. Just remember that Coinbase, like we talked about at the beginning of this video, offers more risk than a typical stock. However, with them down 82%, the risk versus reward is getting more skewed to that reward side. So here you can see centralized from front to end. Many consumers want a smooth and efficient user interface with the opportunities offered by decentralized applications. Okay, so if something simple like Coinbase could offer, decentralized apps like Uniswap or Chainlink. Currently, lack of regulatory clarity and lack of security, which are both created a lack of trust, are preventing Web3 dApps from expanding. Eventually, these applications should be available through centralized platforms. If this occurs, then Coinbase stands to benefit big time. Now, from a technical perspective, Coin is within a long-term ABC pattern. Since November, Coin has been in a severe downtrend in which a total of 5 different downtrends, 1 to 2 waves setup has formed. These impulses explain the rapid sell-off of the stock. So here you can see like the 1-2s, and then you can actually see that it's getting into 5, 4, and then C is right here. Okay, so A already happened, then B was the downward trend. Now we're getting into that C, which can start finding a bottom. So I'm still waiting for some more downward movement, which we'll talk about more price points later on in the video. Now, continuing in the article, we'll see according to the charted Elliott waves, the correction could be over in the next few weeks. Currently, the price has completed the orange impulse wave, and based on the red wave, a surge towards $140 to $160 per share is likely. Bullish point to notice is if we assume that Coinbase can maintain the same amount of NFT volume as OpenSea while charging a 2.5% commission fee, then this would increase Coinbase's annual revenue by around 700 million, which is going to be an extremely hard feat for Coinbase to overtake OpenSea or even be on the same level as OpenSea, because they've already built their name in that space. Obviously, OpenSea has. There is even a possibility that Coinbase's marketplace can reach a higher volume than OpenSea. As TipRank data shows, Coinbase domain, coinbase.com, receives over 120 million visits per month. So if Coinbase acts fast, we believe it can capture a huge portion of the emerging NFT market. Such an opportunity has the potential to expand Coinbase's annual revenue drastically, as the total NFT market cap is forecasted to reach 80 billion by 2025, according to the investment bank Jefferies. Key takeaways alongside trade commission. Coinbase can also earn from interactivity with Web3 dApps and staking offers. Coinbase's Elliott wave structure, which began in November 21, can bottom in the next 5 to 7 weeks. While the near-term outlook for Coin remains bearish, the long-term projection is still firmly bullish. Contrarian investors should look to accumulate Coin below $100, and I would say even below $50. Now could be a good time to start buying some Coinbase. Okay, it's at $61 per share, almost down 30% on the day at this point, down 75% from their IPO. And if we see Coinbase under $50 per share, that's personally when I'm going to start buying a little bit heavier. I want my average cost as close to $50 per share as possible, because if it does go to $50 per share, there's a strong possibility that Coinbase can 10x in the next 5 years. Even in the next 3 to 5 years, if they capture a large part of the NFT market, they can definitely 10x from $50 per share to $500 per share. It's just huge risk is the main thing to remember with Coinbase. At this point, we have the market cap at 19 billion and a P ratio of 5. So they're turning into a value stock right before their eyes. Our eyes, I don't think there's much more risk. But once Coinbase goes to like $50 per share, there's probably not much more risk for long-term investors, especially if you plan on holding for 2 to 3 years. However, anything can definitely happen, and so you always have to be prepared for that also. Overall, I do like Coinbase under $50 per share. That's where I'm going to be buying and looking to sell at least at $250 per share, which would be a 500% gain on Coinbase in the next 2 to 3 years. That's my personal goal. I'm not putting too much money into Coinbase because they're still risky. So something like $500 can go far with Coinbase, because if that 5x's, that $500 could turn into something like $2,500. Okay, so next up, let's talk about Roblox. Let's do a little bit of a deep dive into them. They're only at $22 per share, down around 9% today, down 31% in the past week, 47% in the past month, and from all-time highs, they've been decimated, down 83%. So is now the time to buy them. They IPO'd recently, just last year, at $64 per share. They're a fraction of where they IPO'd at. They only have a $15 billion market cap. A big company like Facebook or Microsoft could definitely swoop in and acquire something like Roblox. So do we want to be investing in them? Let's go into it. They also have a 52-week low of 21 and a 52-week high of $140. Okay, a little summary on Roblox is down an astonishing 75% from highs. The company continues to report solid revenue growth, but investors should focus on decelerating bookings growth. The company is generating free cash flow. So moving on here, we see Roblox was once a heavily hyped stock on the basis of its exposure to the metaverse. The hype has faded, and so has the stock price, as the stock is now down significantly from all-time highs. While some of that decline should be explained from their general volatility seen in the tech sector, the decline could also be explained by certain key metrics. In analyzing the valuation, I explain why, in spite the sizable drop in the stock price, I'm still not a buyer here. Roblox stock price. Roblox went public in early 21. So here we see some of Roblox key metrics. Roblox closed out 21 with an 83% year-over-year revenue growth. So here we see the revenue growth. And look at that, just consistent revenue growth quarter over quarter, year over year. Roblox coupled that strong top line growth with a solid adjusted EBITDA margin prior to the crash in tech stocks. Positive free cash flow was typically effective catalyst for premium evaluations. I suspect that Roblox cash flow generation in part helped the stock reach the insane multiples that it did. And here we can see the adjusted EBITDA growth quarter over quarter. Okay, the issue is that looking forward, growth is likely to slow. Daily active users grew by a modest 33% year over year and just 4% sequentially, which is actually good growth. Here we can see the quarter over quarter growth, consistent without even missing one quarter. Bookings grew at only 20% to 770 million. The difference between bookings and revenue is that bookings reflect cash received by user and revenue reflects the portion which is attributable in any given quarter. If a user purchases an item which lasts for 23 months, then the purchase price is divided evenly for each month for revenue recognition. We can see the breakdown below. So if you want to take some time and look at that, feel free to pause the video and take a look there. The problem with strong revenue growth and slow booking growth is that by definition, revenue comes from bookings. So these trends strongly suggest the revenue growth is about to slow down considerably. In the shareholder letter, the company stated booking growth in quarter 3 and quarter 4 of this year, 2022, should be much closer to user growth rates than they were in January, and our exit growth rates this year are expected to be good indicators of 2023 growth. That suggests that booking growth could rebound to perhaps the 30% level by the end of the year, but even then, that still represents a strong drop from the triple-digit level from just 1 year ago. Let's go over briefly, why did Roblox stock drop? Besides the steep deceleration in bookings growth, Roblox stock drop due to decreasing usage. Hours engaged increased 28% year over year, but declined sequentially. Okay, so this is a very important chart to be looking at, in my opinion, daily active users and hours engaged. So here we see in 2019, there was only 2,900. Quarter over quarter it grows, year over year it grows, and we actually saw them as high as 11,000 hours engaged, but in Q4 21, we saw only 10,000 hours engaged, which is still up drastically from 2019. These hours engaged, by the way, are in the millions. The above metric represents total hours engaged on a per user basis. Hours engaged hovered at around 1 hours per day versus 1.9 hours per day in just the prior quarter. While those hours engaged per day is only slightly lower than prior quarters, it shows that forward revenue growth will largely be driven by users and bookings growth. As investors should not count on growth in hours engaged, a big issue is that while Roblox has historically been seen as a high growth secular story, that growth suggests that the stock might be better viewed like a cyclist video gaming company. Feel free, if you're watching on a phone, by the way, you can put the video on 2 times the speed or 1.5 times the speed if you need it to be a little bit faster. That's personally how I like to listen to videos. And if you're watching on mobile, your smartphone, you can definitely do that for these videos and my future videos, so you cut down half the time and it only takes you half as long to watch the videos. That's a little bit of a tip from me to you if you watch this far into the video. So the next thing that we got to talk about is Roblox stock expected to rise again. In spite of the steep slowdown in growth, Wall Street analysts will remain bullish on the company with an average 4.1 buy rating out of 5. Okay, is Roblox stock a buy, sell, or hold? My view is different. Let's start with the consensus estimate. On average, analysts seem to be expecting $3 billion in revenue this year. That number seems suspicious as it reflects 55% growth from 21 numbers, with bookings and user growth both around 30% or lower. I am skeptical that revenue growth will come in so strong. Let's nonetheless assume that the company can achieve those estimates. Consensus estimates are around 20% after 2022 look reasonable considering the poor bookings growth. What is a proper fair value on the stock? Let's now project long-term net margins. Roblox has seen a cost of revenue steadily from 25% last year to 26% in the last quarter. The rise is largely due to increased amounts of their revenue coming in from mobile devices, which are subject to iOS and Android fees. Okay, so the cost of revenue in millions is going up significantly, which is obviously not a good thing because video game companies trade with more cyclical like multiples than secular like multiples. I can see the stock trading at around a 1.5 price to earnings growth ratio, PEG ratio, or lower. That suggests that the stock could trade at a 30 times long-term earnings power multiple or long as it sustains 20% growth rate. Those projections suggest that positive returns are possible, but in the current market, it's very difficult to recommend buying the stock considering the poor projected return relative to other stocks of similar high risk profile. In spite of the steep drop from all-time highs, I continue to rate the stock a hold. As far as what analysts have to say about Roblox, they have 123% upside to around $51 per share. Some analysts have them as high as $84 per share. And you can see that these are 5-star analysts, just reiterating this 3 days ago, 2 days ago, yesterday. Okay, coming in from JP Morgan, Jefferies, Truist Financial, Drew coming in 8 days ago, $53 price target. Eric with a hold for $50 from Goldman Sachs. So overall, I think Roblox is very interesting. I'm waiting for under $20 per share, closer to $15, $18, $19 per share. I have price targets set around there. I'll be loading up then. This is mainly a long-term stock. None of the article even talked about the opportunities that it could have with the metaverse. And if crypto gets involved and if they get into the NFT space, they already have all those daily active users in the millions. And if all of a sudden they introduce an NFT marketplace that users can interact without even knowing that they're interacting with cryptocurrency or NFTs, they're just playing the game. And now they're actually owning the swords they use or the armor they use, and they can trade it in between friends. And now the friend can own it. You know, that's going to be a huge thing for Roblox. And that's mainly why I'm bullish on Roblox, is because the whole metaverse opportunity that Roblox has, because it can transition those daily active users into more money spending with NFTs if they get it done the right way. So there is a lot of risks, but there's also a lot of reward. Also, don't forget that Roblox did report earnings today and they lost by, or they missed by just a little bit. They're down 10% on the day. That's why I'm looking for that $18 price point, because I think they can drop a little bit more on that poor earnings result. And just to give you a quick update on the rest of the week, after the close tomorrow, we have Walt Disney reporting and Rivian Beyond Meat, which are going to be 3 huge reports. Then on Thursday, we have Affirm, which is a huge one again. We have Tapestry, which is pretty big. And those are really the big ones to look out for. Guys, thank you for all the love you've been showing on this video. Show some more love on this video. Subscribe with post notifications on so you get all the content and you're in the loop when I put out more new content. If you want to get on the close friends list, message me on Instagram. I have deals going on right now for the stock market dip. It's the best time to get on the close friends list and set up your future for more success. And if you want to see success that people have had in the past, go ahead and click on success number 5, success number 4. Don't forget to share with a friend if you think that they'll find you value in this video, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.